Our financial future is evolving by the day. Your car loan, your next mortgage, your credit card bill. As interest rates rise, all of these things are getting more expensive, making it easy to wonder if the American dream is slipping out of reach for the average consumer.
I will definitely pay my mortgage first, but I'll have to cut back on my grocery bill.
This week on The Race, a cheat sheet for your finances. What changes on Wall Street mean for those of us on Main Street.
Good afternoon.
On a Wednesday in July, as parts of the country dealt with a sweltering heat wave, one of the most powerful people in American finance, Jerome Powell, explained his reasons for raising the country's benchmark interest rate again.
Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone.
If it sounds like deja vu, well, that's because it is. This is the 11th time since March 2022 that the Federal Reserve raised rates, and these decisions trickle down to the average consumer.
When you increase the rates, it means that the interest rates across the board will also increase, those in the short term and in the long term. Mortgages will go up, auto loans will go up, credit card interest rates will also go up.
Mortgage rates are around 7% for the first time in more than a decade. The interest rate on a new car loan is nearly 8%. An average credit card is north of 20%. That adds up. A monthly payment on a new car costs $600 in February 2022. At current rates, that monthly payment would cost about $50 more.
We'll see people start to adjust their spending to make sure that their credit is not impacted negatively. And they'll do that up to the point that when they can't, and then they have to make even more difficult choices.
Budgets are about to get tighter for millions of Americans with student loan debt, and that is because their payments will resume in just a few weeks, and there are plenty of people who aren't sure whether they'll be able to make ends meet when that happens.
There are other places Patricia Cummings would rather be in the middle of summer, and yet here she is, teaching at summer school just to make ends meet.
For not only myself, but for teachers in general, you will hear a number of teachers, say, we have more than one job.
Of all the reasons she got into teaching, money was not one of them.
Oh, not because of the money, not at all. We make absolutely nothing. No, not because of the money, not at all.
Cummings is a special education teacher outside of Baltimore. She is 60 years old and has $180,000 in student loan debt from her doctoral program.
It's awful. You shouldn't have to decide whether you should pay a student loan or if you should keep a roof over your head.
At the moment, Cummings' federal student loans are on hold, but that will change at the end of August after President Biden agreed to restart payments during debt ceiling negotiations. Worry has already set in for Patricia Cummings.
So I'll have to cut back on a lot of things. I will definitely pay my mortgage first, but I'll have to cut back on my grocery bill.
The Department of Education estimates 43 million people in this country owe a collective $1.6 trillion in federal student loan debt. On average, borrowers have around $37,000 in debt. Many haven't made a monthly payment since March of 2020, when President Trump paused payments, and are worried about their finances when payments come due at the end of August.
I just can't breathe easy and say, I'm done.
Susan Vincent is among those concerned about her finances when repayments restart. The 78-year-old retired science teacher owes $30,000 in federal student loans.
What is it like knowing that you might die with these student loans not paid?
The way I look at it, if I die owing money, oh well. I like to pay my bills, but this is not fair.
Vincent owes so much money that she's come out of retirement this summer to substitute teach in New York City, just to make enough money to get by when her payments begin again.
What is so unfair about it is that I did, in fact, do my civic duty and teach in a high need area, and I'm still tutoring and substituting. And there ought to be some loan forgiveness for that.
Vincent told me she's still upset about the Supreme Court's ruling that overturned President Biden's efforts to forgive some student loan debt, a case brought by Republican states which argued the forgiveness was outside of his powers. Opponents to waiving the debt say it's too expensive and unfair to people who have paid off education loans or never received them. Vincent, though, is hopeful something might change before repayments restart.
It's the injustice of it, Chris, that just gets to me. People in my income bracket are struggling to put food on the table.
I'm not saying that they have to forgive the entire loan, but I do think that they should take into consideration each individual's situation.
For now, teachers like Patricia Cummings will keep working extra hours and extra jobs, all in hopes of keeping up with their student loan payments.
Credit card rewards seem to be everywhere these days. You've probably seen the ads promising free flights or other perks. We'll talk about why they may soon be going away next on The Race. Credit card debt is at an all-time high. Overall, the country owes almost $1 trillion. That's more than $5,700 per person. About a quarter of that debt has been added since April 2021, a few weeks after most Americans received their final stimulus check.
The COVID pandemic created a lot of money, stimulus money in people's pocket. And what we have been seeing over the past couple of years is people's personal savings are starting to dwindle, and we're seeing credit card debt start to increase. So in short, we're still spending the money, but the money's coming from different buckets that we have.
Dr. Abdullah Al-Barani, one of several financial experts we spoke to for this episode, told us the problem isn't necessarily the cards, it's the interest that builds when you carry a balance.
I don't think it's better not to use credit cards. I think you need to learn how to use credit cards and make sure that when you're using credit cards, you're paying off your debt.
To get your business, credit card companies offer everything from cash back to gas discounts and flight points. And it doesn't take much to cash in. One card's intro offer will get you enough points for a 4-night getaway to Puerto Vallarta, Mexico. That's according to thepointsguy.com. However, those programs may not be around for much longer as Congress debates changes to the credit card industry.
Well, there's a good chance you don't go to one of these, an ATM, as much as you used to. Sure, some people still like cash, but if you walk down the street, there's a good chance people are buying things not with this, but with credit cards. But have you ever thought about how much credit cards cost businesses? Well, Congress is debating that. Some believe reform is needed to lower prices, while some fear credit card perks could soon be a casualty. Here is what we're talking about. You see, every time a credit card is used, there is something known as an interchange fee that kicks in. These transaction fees are paid for by the business itself, the price of offering customers the convenience of using a credit card. Let's say you buy something for $100. Typically, $2 to $3 of that is a fee paid by the business. And while the U.S. has 4 credit card processing networks, some in Washington believe the market is dominated way too much by Visa and MasterCard, creating a lack of competition, they say, for businesses.
There's one place that we can't negotiate, and that's with credit card companies.
Recently, Democrats and Republicans joined small business owners outside the Capitol to introduce the Credit Card Competition Act, which would mandate that businesses have options beyond MasterCard and Visa when it comes to swipe fees.
Small businesses pay the highest swipe card fees.
Mike Beal with Ball's Food Stores in Kansas and Missouri says competition will mean lower fees and more savings for customers. But before you say, great, this will make going to the grocery store cheaper,
make no mistake, consumers will lose.
Ryan Kelly wants you to know something. Kelly is known online as the Points Guy and helps Americans discover how credit card perks like travel points and cashback rewards can help them save money. Kelly says any disruption with credit card interchange fees could mean those credit card perks that perhaps paid for your last vacation get cut.
You get cash back or rewards or like fraud protection. That's all paid for by the interchange. Points are how people are traveling. Many people are traveling these days.
Kelly isn't just guessing here. He says back when Senator Dick Durbin of Illinois passed similar legislation over 10 years ago aimed at reducing debit card fees, incentives to use those debit cards were quickly dropped.
Debit card rewards disappeared almost overnight.
There are already apps and platforms like Venmo and Cash App that are becoming more popular with younger Americans, but federal leaders say it can be risky to keep your money there. This year, the Consumer Financial Protection Bureau issued a warning to those who store money in apps, saying that money is not protected by federal deposit insurance, which the CFPB says insures up to $250,000 in traditional bank accounts.
If my my online bank account gets hacked, the bank stands behind it. And so, the bank, there's actually more control procedures with your credit cards and your banks that say, hey, this seems like an unusual transaction. And even if something happens, they may support you on it versus, whether a Venmo or something like that would have that same amount of controls and security behind it that would make you feel comfortable.
I spoke with University of Denver business professor Jack Buffington. He says while he recognizes some of the privacy concerns with payment apps, he also says it's important to note how common digital banking is worldwide, like with apps like China's WeChat, which can be used as a social media platform and for payments.
I think it's inevitable. I mean, it's really where it has to go. I mean, if you look at what's happening in other parts of the world, it's called social commerce in Asia, and Asia is well ahead of the United States when it comes to, the mix between, online applications and fintech.
On its website, Venmo says they strive to ensure security, but they also say they can't guarantee personal information won't be accessed. Your grocery bill is probably more expensive today than it was just a couple of years ago. We'll take a look at some of the efforts to bring that down next on The Race. As we talk about the Federal Reserve's interest rate decisions, it's important to remember why the Fed started raising interest rates in the first place, and that's inflation. Prices rose 8% in 2022, the highest one-year increase since 1981. Experts say the pandemic played a major role, but the exact impact is tough to measure.
A lot of people like to blame the stimulus package. Giving people a lot of money means that they're going to spend more money. And if they spend more money on the same amount of goods, then the price of those goods has to go up. And that's the typical narrative of inflation. But the COVID pandemic provided other challenges. And one of those challenges was the supply chain. So we were not working, we could not work due to health reasons. So we did not have enough goods in the market. But we still wanted to spend. We were trapped at home, we wanted to feel good, so we started to buy a lot of goods. And goods are harder to make, they take longer to make, and therefore the prices went up.
No matter the root cause, the impact is on our budgets, especially when it comes to groceries. The cost of things like bread, sugar, and frozen vegetables are all up more than 10% compared to this time last year. And it's caught the attention of the federal government. The Department of Agriculture said earlier this year that it would partner with state attorneys general to look for anti-competitive practices in the food industry.
Farmers often ask me the question, how much of the food dollar do farmers get and how much does the supply chain get? Well, it turns out that farmers get anywhere from 16 to 18 cents of the food dollar, which means that someone else is getting 84 to 85 cents. And so that's why it's important and necessary for us to make sure that we squeeze out every single anti-competitive or antitrust violation that may be increasing that by a penny or two, because those pennies or two matter to families.
In times of high inflation, people generally tend to pay closer attention to what they're spending, but most manufacturers count on them not noticing if packaging shrinks. So one man is trying to change that, raising awareness about a common practice known as shrinkflation.
My father was a cheapskate. I mean, plain and simple.
Edgar Dworsky knows what it means to be frugal.
So I learned from the best.
He's been tracking not only prices, but the size of goods since he was a teenager.
I remember my Mounds candy bar in the 1960s used to be 2 ounces, then it became 1 point something.
It's turned into his passion, now running a website called mouseprint.org, where he writes about everything from paper towels to ice cream, you name it. His website has pages and pages dedicated to exposing new package sizing.
Over the past year and a half, I'd say the number of items that I've written about has doubled from past years. So with all this food price inflation, we're seeing grocery price inflation. There are more examples out there.
Shrinkflation is the art of reducing the package size, but not reducing the cost, sometimes even raising the price. It's not always easy to catch.
These companies have become masters at kind of package manipulation. The packages may look the same size, but you're getting less. I can think of an example of 2 cereal boxes. You can look at them head on and they look like the same, the old and the new are the same quantity. If you turn them sideways, you see the new one's a little bit more narrow. At some point, I don't know how these boxes can even stand up on the shelf. They're getting so narrow.
People send Edgar tips about products like this one about toothpaste, showing the tubes dropping in size, or this one on a milk producer that shrunk its half-gallon carton down to 59 ounces.
Is there nothing off limits? I've always said it's going to go too far. I'll know it's gone too far when you open that carton of eggs and there's only 11 inside. When traditional ultra-pasteurized milk isn't a half gallon anymore, to me, that's gone too far.
Shrinkflation could cost companies business. A survey by Morning Consult last year found nearly 50% of respondents saying they switched brands after noticing a product shrunk. 30% said they stopped buying from a specific brand altogether. Edgar says shrinkflation tends to come in waves during times of high inflation, but don't expect the practice to ever completely disappear.
As long as there are groceries on supermarket shelves, we're going to see shrinkflation. Hopefully the number of instances will decrease when inflation decreases.
So what can you do? Edgar says before you go to the store, take a look in your cabinet at the item you're going to replace and look at the net weight or net count of that item and then compare it when you get to the store. He says generic brands or store brands are usually the last to downsize. And he also says to pay close attention to that per unit price on the price tag. I did ask Edgar what a typical shopping trip for him looks like. He says it's very strategic. He only goes to the store if something he needs is on sale. He buys in bulk, and he says usually his grocery trips never cost him more than $20.
More next on The Race. A couple of years ago, the crypto world was seen as a volatile, yet potentially rewarding place for people to invest. Today, its perception is a different story, especially when it comes to NFTs or non-fungible tokens, digital artwork marked with digital fingerprints that make them one of a kind. NFTs are bought and sold online with values that can go up and go down.
Before NFTs, the only way we could really sell our art was through printing it large scale and in galleries.
I met digital artist Blue Woods early last year. In 2021, he made roughly $75,000 selling NFTs. Last year, he says he made even more than that.
Got married at the end of last year, so we were able to pay for the wedding straight out without debt, which was really big for us.
But 2023 is a different story for him and the NFT world as a whole.
The space is it's pretty slow right now. We're what we call a bear market, definitely compared to the huge boom in 2021 and 2022.
Analytics site NFT Go says the market has dropped more than 40% over the last year. Some experts point to fading hype and growing levels of distrust in the crypto industry as reasons why. One example of that sinking value is the story of an NFT sold in 2021 of the first ever tweet sent by Twitter founder Jack Dorsey. An investor bought the NFT for $2.9 million. Now, when you go to the NFT online marketplace OpenSea, the best offer stands at roughly $14,000.
This year, yeah, it's been a lot slower. I only sold one piece, but even with that, it sold for $6K. So it's a good amount of money for a digital art.
While Blue may not be making the money he did on NFTs a couple of years ago, he says he's still hopeful that people will find value in unique digital art like his that just doesn't translate as well to a canvas print that you might buy at a brick and mortar store. That will do it for our look at money in America. I'm Chris Stewart. Join us next week for The Race.